Right, we just had inflation data out of Australia, slowing more than expected here over the last quarter, boosting the case for the Reserve Bank there to cut rates next week. We're joining us now from Sydney is Ivan Colhoun. He's head of Australian economics and property research at ANZ. Ivan, thanks for joining us. So, is a rate cut a done deal next week? And if so, would Glenn Stevens surprise us with 50 basis points as a reduction?
Look, I think it's absolutely a done deal. The question of 50 is a harder one to answer. I mean, typically the bank only moved in very big rate increments during the global financial crisis. So I think it's still a low risk that they will go 50 next week, but it's certainly a higher risk than it was before this number, which was much better than expected. I think it's more likely that they'd go 25 in next week and 25 the next month rather than 50 at one go next month.
Well, given the data, I want to just talk about that. Why is inflation becoming more benign there in Australia?
Look, a couple of things. Firstly, when you talk about the overall CPI or the headline number, we've had massive falls in the prices of fruit, particularly bananas. Bananas were down another 60% in the latest quarter. That's reversing those terrible floods that we had last year, which pushed the CPI up. So that's why that's the main reason we got a 0.1 for the headline number. The biggest story is the core numbers. They were very, very well behaved. So 0.3, 0.4 for the two different core measures, together with last quarter, which was slightly revised up. It does say core inflation is running about 2% in Australia, and that's the lower end of the Reserve Bank's target band. It's an average target over the cycle, but being at the low end, it really removes risk of overshooting in any near-term time frame. Why is that happening? There's two forces, and like so much of the Australian economy, we've got this two-speed economy. We've actually got tradables inflation, which reflects both the high currency and also, I think, a lot of competition falling, so actual deflation. And then we've got a lot of government-administered charges and housing-related charges going up quite strongly in price. But the net of those two effects is pretty moderate inflation.
Well, OK. I think you hit the nail on the head, though, didn't you? You talked about the floods last year. So base effects are helping here. So do we keep inflation low for the rest of 2012?
Yeah, look, I think so, and certainly the headline numbers, they're actually even below 2% now. But, you know, the core numbers, the Reserve Bank will still have some concerns about the stickiness of the non-traded and services and government-administered charges, but it does have a CPI mandate. The CPI is very low. It's at the lower end of the band, so I don't see any reason why, given the economy is you know, it's moving forward here. It's certainly not as bad as lots of other places of the parts of the world, which is a good thing. But now I think there's no reason why the Reserve Bank cannot just be a little bit more accommodative for the sectors of the economy that have been finding things tough.
Ivan, thank you so much for your time. Ivan Colhoun there from ANZ Bank joining us.